So, welcome to today's podcast. Thanks for joining me as always. I really appreciate you guys as audience members, and hopefully, you're getting some good content and information, education from these podcasts. I'm always trying to figure out what are some things that could really help you as you're thinking about your own personal finances. Here at this recording, we're here in middle of summer, July 24, and it's a little crazy, right? There's a lot of things going on. There's still a lot of uncertainty around where the markets are going, the economy. Certainly, inflation's starting to come back down a little bit, and jobs are somewhat steady, even though you see some cracks. There are many who are considering this a dangerous time where a recession is likely to happen, but no one really knows. Stock market is at some of its all-time highs. So things are humming along. A lot of uncertainty still abounds in our world. So this is really a great time to start assessing and taking note of what others are doing, just to see if what you're doing is optimal and maybe making some pivots and adjustments. And one of the things I always like to do is to just see what others are doing, just to get a different perspective. In our world of finances, it's the typical mainstream advice is get good grades, get a good job, max out your 401ks, don't take much debt on, all these sorts of things. And certainly there's some good aspects to those things. But what are some of the wealthier folks doing? Right. That's usually what people want to hear about because they want to say, what do we take from them? They're not this sort of unicorn in the desert sort of people. Like they're real, right? They've built their wealth in a way that we can follow and learn from. And one of the groups that I've always paid a little attention to is the Tigere 21 group, which if you don't know much about them, you certainly Google it or chat GPT it these days. But they're an investment group that it was built to help each other grow their wealth. And they're high net worth folks. I think they're, classified ultra high net worth, 10 plus million in assets, investable assets. And really it's a peer group where they learn from each other, network, and you have to become a member of it to be involved. And so they have meetings to review each other's wealth strategies and what they're doing and help each other build and protect and grow their wealth. And one of the unique things in there I thought was interesting was they kind of put themselves on a hot seat and they share what they're doing financially, and everyone jumps in and sort of gives them feedback, advice, or criticizes what they're doing. And I find that's good. It's a healthy thing, I think, in general, right? Like to expose ourselves. It may not feel comfortable, but getting a second or third opinion on it, I think, is always a positive thing. And certainly there's a networking aspect of it, is relying on other successful folks and building off each other and leveraging each other's experience. So I think that's a very positive in a lot of ways. And I believe that within that group, there's a lot of focus on philanthropy and giving. So wealth isn't just to get greedy and use it, but for yourself, but how do you use your wealth for other people and other things that matter to you, which is certainly resonates with me personally. So one of the things that this Tigere 21 report puts out is where they're allocated broadly across membership in terms of their investments. And we know as it relates to personal finances, it isn't just about investments, but it is a good chunk of it, right? So it's always interesting to see where the wealthier folks are putting their assets and their money. And the latest one I was able to obtain, I think it's set for like Q1 of 2024. So their allocation is probably different than most. Now, most families in America, they probably have the vast majority, and this maybe you too, is vast majority of wealth in public equities, whether that's in stocks or bonds, mutual funds, et cetera, and maybe a big chunk in their private residence if they are lucky enough to own a home, which I know a lot of folks are priced out of it these days, but a good chunk of equity in their home. So that's where a lot of people's wealth is tied up. Well, when you look at the Tigere 21 report, their latest allocation sends a different sort of message. So the highest number is in private equity, business ownership. So a lot of the folks in this Tigere 21 group were executives or entrepreneurs, business owners, and the vast majority of their wealth is tied up in two areas. One being private equity in the latest allocation at 29%, so nearly 30%. The second highest was in real estate and could be different types of ownership, whether it's direct ownership or syndication work. It doesn't specify, but 26% in real estate. So the combination in between business and real estate is the majority, 54%, 55%, sorry, between the two of them. Public equities is at 21%. And so a fifth of their wealth is tied in, investments are tied into public equities, 11% in cash, and then 8% fixed income, and then some smaller pieces. So when you look at this broadly, so compared to the typical sort of approach or what is taught in the mainstream, is everything's in the markets, right? The public markets. Well, for folks who are in the wealthier world, where they are positioning their assets are things that they can own and control, right? In the world of business and real estate. And certainly in the world we live in today with higher inflation and potential for inflation to kind of stay with us the longer, well above the targeted 2% rate that the Fed would like, understanding why they're putting it into these areas is important. And so what do we take that as the kind of normal Joe investor like we are and include from, say, Tigere 21? Well, a lot of this touches back on the model that certainly we espouse here at Perennial Pride is the hierarchy of wealth. And really that really encompasses a few different things. One is just like a house and you're building your wealth and you think about a house is building up a strong foundation, right? The foundation is huge, right? That's where you build from. Obviously, with a bad foundation, just like in a house, things can crumbling down quite a bit. So that's where the savings and protection, risk mitigation arm of your life is, whether it's through insurances or just safe house of dollars to store wealth, right? We have to be constantly storing wealth, and that becomes a big base. And where we like to do it, obviously, is in that specially designed whole life insurance policies that have multifaceted sort of benefits from protection and saving, right? Today, it is not a bad place today to save within money markets, and even banks are providing a little bit, but historically, they haven't provided all that much in terms of return. So in these higher inflation environments, obviously, we lose wealth along the way when we're keeping our money safe. So we like to store it places where there's higher benefit, right? In terms of return and other aspects of it that could benefit us financially. So, but the second tier is where most of the investment goes. So obviously the foundation is safety, risk mitigation, but in terms of investment, tier two is where we want to place more of our wealth. And this is where the wealthiest folks are putting their money in things that they own and control, whether it be starting up your business or partnerships, certainly ownership in real estate investments, right? That you have more control and have an asset to manage. And then obviously, where it's not on this typical investment allocations is personal development, investing in yourself and your networks and your growth to become better skilled. And certainly it's an area that maybe it doesn't show up always on the radar in terms of asset allocation, but still a huge component. So, but really what those things in my mind equate to is investing in things that you can control and are benefiting your skill development as well as ownership, right? Direct ownership. And so those are areas that we want to amass more of our wealth. And you see even in the Tigere 21 allocation, that's where the majority of their assets are sitting. Now, as you go up the chain, obviously losing some control adds, in my mind, additional risk because you don't control what happens to those assets. So take, for instance, the public equity markets, right? You're maybe investing in businesses that you know and trust, but you don't have any real control of the direction of where they go. Obviously, for folks who are involved with it and can learn more about, maybe they're closer to it. But for the vast majority of the people, they'll see a name and understand a company. You don't really know or have any control of how they operate or what, and certainly don't have a lot of influence on it. So you take what happens to them, right? And there's good things with that, right? Especially if you understand that market or that company. Investing some portion of your assets there is good. But as we see in the Tigere 21 world, where you have people who are building significant levels of wealth, they are putting their time and talent and capital in places that they have more familiarity with and can have more ownership and direct control. And in my mind, even though that for some that may seem riskier, my belief is that it actually reduces risk because you have a little bit more control of what happens, not ultimate 100% control. We don't really have that with anything, but we have more control because we can change strategy and direction and have more say in what happens versus within a stock portfolio or a mutual fund portfolio. We're far removed from the management and control what happens. And certainly in our distorted environment of the influence of the Fed and fiscal policy, there's a lot of things we cannot control what happens. And now here we are sitting with higher interest rates than we're typically used to. Inflation is still nagging on us, and that's going to probably be sticky. I think somewhere there was from since COVID about the 25% increase in the costs of things generally, which really eats into our wealth, right? So that's where it's so important to recognize and invest in things that are going to hopefully be hold value in cases of inflation or go up with inflation as time wears on. So really important to recognize that. So for you as an individual who may be in your business, which is great, is to think about how to expand, obviously, assets outside even your business, because I think that's also important to build some diversification, but building in places that maybe you still have ownership and control over, like real estate or investing in other people's businesses. But for those who are in a job and have the bulk of your assets sitting in equities and the risk of like market gyrations is starting to migrate and start thinking about, are there ways that you can start having a side hustle or business that you can evolve into, right? Something that you just naturally are passionate about, interest in, and spend time on. Those are areas that you might want to dip and say, how could I create a business? Second piece is certainly in the job markets today, it can be a pretty precarious area. You see more layoffs coming, but what are ways that you can actually make yourself more valuable, right? The wealth is built around like problems we solve. If we solve bigger problems, we're going to get paid more and compensated more. I believe that. So putting yourself in a position that you're more valuable. So taking the assessment of the landscape in your job or your industry, what are things that skill wise or knowledge base that you would benefit you in the longer run, and getting ahead of that to kind of proactively sort of seek it out and or meet with others that can help you build those skills. And then certainly real estate. We're in a tricky time right now with real estate. Certainly different markets are going to be very local, but thinking about real estate in a sense that there might be opportunities coming as maybe we experience some recessionary pressures and economic downturn, that there might be more opportunities there to get into the real estate game. And so this is probably a good time to get educated and learn about real estate and the opportunities associated with it, and realize that there is going to be a cycle to all of these things. And we've seen, especially in my area, a massive inflation of the pricing of real estate that's drowning out a lot of younger folks to be able to even afford real estate. But for you, as you're building up and thinking about real estate, preparing yourself from an education standpoint and even capital, right? Having access to cash. In these days, like cash is something that's actually paying a little bit, and certainly sitting on sidelines on money markets. I certainly understand why folks are doing that, but historically they really haven't paid all that much. So that will likely turn as the Fed eventually reduces rates. But getting in a position that you have ample access to cash somewhere, right? Whether it be in bank accounts, money markets, life insurance, whatever, so that you can deploy them as opportunities present themselves. And really, outside of just getting educated, is being around others. This is the beauty when you look at things like Tigere 21, super wealthy folks, and they still are humble enough to know that they don't know everything. So they're seeking out others who are also knowledgeable in different areas, and then partnering with people that with like mind and common values. I think it's still important to continue to network and be out there and find your quote unquote tribe that you might be able to explore opportunities with. And you never know until you get out there. And so being open-minded is always a good thing, and something I constantly stress with kids, because opportunities will present themselves if you're looking. But if you think you know it all and are going to stay in your lane, then those things become invisible. And so I highly encourage you to open up other areas of your life and explore and get educated, because you might find there are other areas that you want to get into. And maybe if you enjoy your job, stay with it. But maybe just migrate and pivot a little bit to other areas to expand your wealth building and for those who maybe not happy with their job, one way to start is to kind of start exploring these other avenues, whether it be an investor or owning a business, and at least starting small and starting seeing if it might be something you would enjoy more and get more satisfaction and gives you the power to maybe leave a job that you don't like. So just more options I think is key, but it requires taking some action, getting educated, learning how others are doing it, and then adopting the best path for you. So I hope this was helpful to shine light on how to think about kind of how others are viewing their finances, other areas that you want to go explore into. And I think it's something that in the long run will be hugely beneficial and open up your eyes to new opportunities and experiences. So take care and hope this was helpful. We'll see you on the next episode. Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next